A little early, so I'm gonna let everybody filter in here before we get it going. We'll start with, you know, the SpaceX IPO. We'll talk about that a little bit before we get into the webinar. I'm sure they'll chop this out later. So, pretty exciting day. I think, this is one of those moments that a lot of people remember where they were type deal. What were you doing today? I don't know that it's as drastic as some of the other, huge events that we've seen in our life, but pretty big deal. SpaceX is now the sixth largest company in the world on the first day that they've ever been publicly traded, which is big deal. We now have Elon Musk. He's the first, recorded trillionaire that's out there. I think that there's been some other people that might have met that criteria, that just aren't publicly available. Even when asked, Elon's talked about his Putin and many other monarchs or people that are, large enough to control companies or countries, excuse me. They have much more wealth than he does. He actually defined it as like you are, you know, extremely wealthy or control a country when you have a legion in one of the interviews he was in. So pretty cool. He will have a legion of robots here in the not too distant future. I don't know if he will be the overlord of those robots, but that's yet to be seen. So we'll let a few more people filter in. We are a few minutes before the hour, and then we will get it going. So hopefully y'all are having a good week, a nice ending to the week. Appreciate y'all taking time out for the webinar today. It is Friday. It is the 12th of June, 2026. And I think that this will be extremely relevant for people in the not too distant future as we do see the adoption of digital assets, XRP in particular. That's what this webinar is about. And since we are at time here, I'm going to go ahead and give my disclaimer. This is recorded and will be passed back to you if you're registered for this event, but anything shared here is not financial advice. Only for entertainment and educational purposes. You should always speak with a financial advisor before making any investment decisions. We're going to talk about some high-level hypothetical scenarios that you may find yourself in the not-too-distant future. And any opinions I share here are my opinions. They are not the opinions of Digital Ascension Group or any of its subsidiaries. So I like to get that out of the way early so that you guys, we can get into the meat and potatoes of things. So if you join this, if you, put your information in and you are here, if you're watching this later on, you have a pretty decent allocation to XRP. If you're not quite at 10,000, you're pretty close. You probably have more than that. A lot of you may have more than that. You are in the top 4% of total wallets. So as of today, I think there's almost 8 million wallets on the network. We're starting to see agentic payments come online on the XRPL. The first ever agentic payment was processed yesterday on the XRP ledger. So with that, I think you're going to see a proliferation of wallets, and it's going to be difficult to discern, are these individuals or are they agents that hold this amount of money in the future? Now, obviously, there will always be beneficiaries that those accounts are associated to, even if is an AI agent that is in control of the money that's moving there. I would encourage you to hold your questions till the end, if you wouldn't mind. I'm going to run this down for about maybe 20, 25 minutes. It's not a ton to go over, but if you do have questions, you can put them over there in the Q&A channel. I think comments may be disabled on the video this time, so the Q&A channel is where I'm going to be looking for things once we get to that point in the program. But I've got a whole list of things that I want to go over for you guys just as high-level things if you do have this type of allocation. Things that I think about. I'm going to talk to, my journey, some of the things that I've thought about at different levels of wealth, potentially what you might want to focus on as things progress here and you do find yourself in a different position with the investments that you've made. There's kind of three levels that I think are probably breaking points. I don't want to say breaking points. Important junctures that you will run into as the price of this asset appreciates. So we're going to speak specifically to XRP, and as the price goes up for that, at what price points do different things make sense? And the really kind of mindset shifts. So this is where I want to start before we get into the meat and potatoes. Right now, you're trying to become wealthy, right? Potentially you already are. Maybe you have a small allocation. It's a small portion of your portfolio. You have traditional equities. You've got a business. You've got real estate. You have other things. But many people that are going to be watching this, those in the audience and later, you're a normal person, right? Like you got a W-2, maybe you're well-to-do, and this isn't, the largest piece of your portfolio, like I mentioned before, but you have a significant allocation, whatever it means for you, and you are trying to get to the point where you have millions, tens of millions, hundreds of millions of dollars at some point in the future as we see price appreciation. So I'm going to break this down to kind of orders of magnitude. We see ourselves at around $1 per XRP today, a little bit more than that. This has pulled back substantially from the high last year, $3.60. Many of you may have bought in at that point. Many of you may have been in before it. Many of you may have just recently found this, and that's okay too. I continue to dollar cost average down because I look at this, similar to what I think Bitcoin did. If you had bought XRP or if you bought Bitcoin at $5, $1, $2, 50 cents, it didn't really matter where you bought it. You've done exceptionally well over the past 15 years. XRP has been around since 2012. And so that makes it 14 years old as of this month. And, maybe it'll reach similar heights in 15 years like Bitcoin did. I think it might take it a little bit longer than that. But the three price points that we're going to focus on today are going to be at $100 XRP, $1,000 XRP, and a $10,000 XRP, which I think are all completely achievable based on the adoption of the network and many other catalysts that will push it to those prices. If you're here, you probably see my other content around what would have to transpire for us to see that type of price appreciation on the asset. But hypothetically, we're going to talk about those different scenarios and what you need to be looking at, before we get there at those points and then into the future. So the paradigm around those three price points, even at $100 XRP, if you have 10,000 XRP, you're still trying to get wealthy. And I know that sounds like a lot of money. It is a lot of money. It's $1 million for those that have, 10,000 XRP at $100. That's life-changing money for most people. And, I'm actually going to speak to a couple different amounts here because I'm sure that we have people that are going to watch this or watching it now that have 10,000, 25,000, 50,000 XRP, maybe more than that. But those are the amounts that I'm going to speak to. And then again, the price points I mentioned before. So if you had, call it 25,000 XRP, you're looking at 2.5 million at $100. And 50,000 XRP would be 5 million at $100. It's almost enough to retire. If you're at the upper end of that, if you had 5 million in XRP and you're spitting off, call it 5% a year conservatively invested, that's $250,000 a year. Many of you may make that in your salaries. Many of you may be less than that now. That could be life-changing money for you depending on where you live in the country, your, lifestyle requirements. But what I would say, now and even at that point, upgrading your lifestyle substantially is probably not the best choice. I'm not saying don't enjoy the fruits of your labor and, buy the things or pay off debt or do all the things that you have planned. I'm just saying, you want to make sure that you have enough cash flow that you're not going to put yourself in a position where you have to continue to liquidate XRP or the principal that you've invested over an extended period of time and deplete that so that it's not worth as much later on. Now, if you do believe, like I do, that it's going to continue to escalate in price, then maybe you are taking profits on the table. You should define that now for yourself, right? Even at $100, you still have some time to do that if you're in these levels. Have an exit plan. Know what you're going to do with that money. And as it continues to escalate, maybe you're going to take a little bit more off the table. A lot of people just want to de-risk their initial investment, which I think is a good way to think about it. Then you're playing with house money, right? People use that example frequently. So that's kind of the first thing. Just have an exit plan. Understand what you're going to be doing with that capital if you are taking profits, at which points you're going to be taking profits. And also, you're going to have the ability to borrow against it. We're creating ways right now for people to be able to earn with their XRP. There's already DeFi protocols out there that have been structured to be able to do that. And we're working to build out assurances around that and other things to be able to mitigate the risk associated with DeFi so that people are more comfortable playing in that space in an institutional setting. The other thing that you want to think about at that point, and I don't know, it's probably not appropriate right now for people that are in this category, is establishing an LLC and trust, right? So there are some estate planning things that you might want to start looking at. If you're up the upper bound of that, around 50,000 XRP, even 30, 40,000 XRP, LLC might make sense for you. It's a cost to benefit, right? Would you rather buy more XRP or do other things with that money, or go ahead and pay for those services? We bring that down substantially compared to some of the other competitors in the market. There are people that are cheaper than us also. We don't charge a significant premium on those services. The LLC is $1,500. The living trust, I believe, is an additional $500 through our platform. You do want to work with an estate attorney that understands crypto, right? There are few and far between out there when they're structuring entities. You want to make sure that the operating agreement and the trust agreement and everything else that's outlined in there for the maintenance of those entities and the ongoing, stewardship of the assets is structured in a way that you have that outlined in the documentation associated with those structures. And that might be something that you're considering right now. Like I've mentioned in the past, I really don't think it makes a ton of sense for people that have less than $50,000 to $80,000 in digital assets at this time. Because again, the cost of benefit, you could be buying more of the asset and still not put yourself in a position where you're upside down on the taxes when it appreciates. Now, if you think it's going straight to 1,000, which we'll get to in a second, that might be a different story. You probably want to go ahead and find an experienced CPA, somebody that is going to be able to help you mitigate taxes, look through your estate, structure these things the right way. We do have, partners that we refer people to out of Digital Ascension Group. But there are plenty of good attorneys and CPAs out there on the internet that have some experience in digital assets. Although it may not be XRP specifically, they may have dealt with Bitcoin or Ethereum or Solana, some of the other assets that we have seen substantial price appreciation on and where a bunch of liquidity has already flowed. So if you can find those people, that's great. If you need some recommendations, you can email us. It doesn't cost you or us anything. We're happy to just provide people with good resources if they need them. You probably want to understand how to protect your assets from creditors, right? So a revocable living trust is what most people are going to be looking at. If you do have a net worth of, call it more than $100,000, including your home and your vehicles, it's not a bad thing to get set up irrespective of the LLC, right? A living trust is going to be able to pass those assets on without probate. A will not do that. You might also create a pour-in will that would transfer the assets that aren't listed inside of your revocable living trust into that vehicle upon your passing. Nobody likes to talk about death, but we are all going to pass away at some point. And we want to make sure that we leave the impact that we want to have for our families. Speaking of my not my financial situation, but my situation with my father, he passed away 4 years ago. He thought that he had a trust set up. He used Nolo. It was online, paid a couple $1,000, had an attorney notarize it, thought he did all the right things, but he never actually transferred any of the assets into the trust. He never set up any bank accounts or anything inside the trust name. So when I became the executor of his estate, which was designated in his will, luckily my family was amicable and we didn't fight over it. And what I consider my stepmom, even though they were never married, she ended up with the majority of everything because she was the beneficiary on the accounts, which she deserved it. She had to put up with it. So love my dad to death, but he was difficult to deal with sometimes. And you probably know this too, your parents, you probably have a lot of the same characteristics they do. And so sometimes you don't see eye to eye on things. Anyway, I digress. So because of dealing with that personally, I'm pretty adamant that I think you're doing a disservice to your kids and whoever you want to help if you don't at least put something in place. I wish we had what we have now to be able to provide to him. For $500, he would have paid that in a heartbeat, had everything structured the right way, and there wouldn't have been, as many conversations that had to be had, and we wouldn't have had to go through probate for a portion of his estate. So if you are concerned about that, if you're thinking about those things, probably something you want to look at. Even if it's not with us, you can work with an attorney in your state to structure that. It's probably going to cost you a little bit more if you're working with an attorney in your state to do those things, but you do probably want to look at putting your home and your vehicles, family heirlooms, gold and silver, that type of stuff in there. That is not its own entity, and it does not provide creditor protection, though. So that's a consideration. You probably want to set up multiple trusts in the future if you do have significant wealth. Most of the centimillionaires and billionaires that we've dealt with and I have conversations with have somewhere between 7 and 10 trusts structured for their estate, all with different things that they want to do or accomplish with the investments or the assets that they put in those different vehicles. And again, happy to work through all the complex estate planning but this, we're going to keep to, the smaller amounts of wealth, I guess, which we'll get to the larger ones here in a minute. As asset continues to appreciate, there are other considerations around more complex estate planning that you definitely should look at. But at $100, living trust, probably a really good idea. LLC, holding your assets, really good idea. Between the two, that's where you're going to get the creditor protection. So if the LLC is structured correctly and you have, all the documentation and you're doing your annual meeting minutes and board resolutions and all the stuff around that, it's going to provide you creditor protection. There's going to be a corporate veil that people won't be able to pierce if it's formed in the right jurisdiction. We do it in Wyoming. You're going to get really strong creditor protection. There's charging order protection there in Wyoming. A few other states that have that are South Dakota and Nevada. Delaware, there's a few of them that provide anonymity and the charging order protection. We choose Wyoming because it's the friendliest for digital assets. So, that's kind of at a high level, around $100, some of the things you should be looking at. You might also start to diversify, right? If you are going to take profits, and again, you understand what you're going to be doing with those profits, have an objective for those, have a plan. I'm going to be taking profits here. These are going to be the tax implications. This is how I'm going to invest it to be able to offset those. And once you have the cash flow to be able to supplement your lifestyle, that's when, I would recommend looking at taking on additional liabilities or financing things as that is appropriate. And again, I would strongly suggest also talking with a certified financial planner on all this stuff. We do have a full program at Digital Wealth Partners that outlines all these things. So, again, you're not alone. You have LLMs and AI and all this other stuff. But somebody that's been working on retirement planning for the majority of their life is probably going to be able to provide you some additional nuance and guidance that you're not going to get from a computer. So next level is going to be the $1,000, right? So, maybe we have a pit stop here or there. You have some things structured. We continue to see appreciation and adoption for the asset. And through that, we're going to continue to see people's net worths continue to climb. And at 10,000 XRP at $1,000, you're going to have $10 million. That's substantial. That is enough to be able to retire and quit your day job and park it and live off 5% almost anywhere in the nation. It's $500,000 a year in income. 25,000 XRP would be worth $25 million. Now we're creeping up on the gift tax threshold here in the US, which is $30 million between you and your spouse. If you're single, you're already over it with 25,000 XRP at $1,000 a piece. And then at the 50,000 XRP, you're over it. You're at $50 million. Whether you're married or not, doesn't really matter. It's going to be difficult for you to gift the whole amount out of your estate unless you have it inside of an LLC. And one of the benefits there is you can get a 409A valuation done on the corporation that holds those assets. And you would think, okay, the valuation of the company is the underlying asset, so that's what the value of the company is. Well, if you gift small portions of equity to other family members or people that you want to take care of, you can actually get a reduction in the valuation of the company. Even if it holds $50 million worth of an asset, you might get a 25 to 35% reduction in the total value that that company is worth on paper, which is a 409A tax valuation. Then, once you have that valuation, you might be able to gift all of the equity into an irrevocable trust, which should be one of the considerations that you have around that time. When you are approaching the gift tax threshold or are over the gift tax threshold, protecting your assets, the legacy that you want to leave, understanding what that's going to look like. Hopefully that's purpose driven. I think a lot of people on this webinar and those that watch it later will likely have strong passions around helping other people, creating value in society, giving back, solving problems for the world, creating solutions that, are near and dear to your heart for things that you've experienced in your life that may have been difficult. So if you have a family member that has a certain disease, if you have a certain problem and you want to start a business, if you see a foundation and they're not allocating capital the way that you think that that serves whatever purpose you want to provide to the U.S. government, and that's either going to be on your own volition, or you're going to be donating that money to the government through taxes, and they're going to get to do whatever they want to with it, whether you have any say so or not. So most people tend to want to take that money on their own and do something with it. If you are going to make charitable donations, some of the considerations around that, your income is what these percentages are predicated off of. So if you want to donate to a public charity, your income that year in cash, you can donate up to 60% of your total income that year to a public charity. As far as an in-kind transfer, so if you wanted to move the crypto into a public charity, it's only going to be 30% that you're able to move in there. And again, that's predicated on the amount of money you made over the year, not the total amount of assets that you have. If it's a private foundation, those are truncated even more. It's going to be 30% in cash, and I believe 10 or 20% in kind. I'm not sure on the number there, but it's less than that. So just be aware of those things. A lot of people I do expect are going to set up private foundations as their assets appreciate, and you would be able to donate to those as well. You see many billionaires do that. Bill and Melinda Gates Foundation, they actually just sold the last bit of their Microsoft stock a couple of weeks ago at the Bill and Melinda Gates Foundation. There's lots of tools out there that you might be considering at that point. You would, again, want to work with a tax attorney or an advanced estate planner that's familiar with crypto to make sure that you're structuring that the right way. I know enough to be dangerous. I operate at a high level. I understand a lot of the tools and mechanisms by which they work, but I can't provide you any specific advice around that. You would rather have a conversation with an attorney than me anyway. So the mindset shift here is no longer becoming wealthy. You're wealthy. You've got 10 million, 25 million, $50 million. How do you continue to protect this and steward it is really what you're going to be looking at. And if you are setting up a irrevocable trust, I would encourage you, part of our process that we have is setting up a family constitution, mission statement, core values, principles, governance around how that money is going to be passed on and how it should be used, who has access to that money when, inside of the trust, how, under what parameters the distribution trustee and the trust protector can make changes, how the assets can or won't be distributed, if you're going to touch the principal, if you're not. A lot of different things you can work through there. But we have a really good process and team around that to make sure that, you're working through those things on the front end so that you're not setting up structures that you don't need or don't work the way that you intended when you originally thought that you should do it. That's the mistake that I see a lot of people make at this point is, they've heard that they need to set up this type of trust, or they've heard from a friend that they did it this way. There's a lot of tools out there, and you want to understand which tools are appropriate for your situation. But if you haven't defined your situation and what you want to do with your legacy and that capital, you can find yourself in a position where you've paid a bunch of money and done a bunch of things, and it's not the outcome that you were looking for when you realize what you want to do. So the other thing, and the mindset shift here, again, to preservation or stewardship over accumulate. I just spoke at a conference here last week, and I gave the example of the Ethereum billionaire. Many of you may have heard me share this story before, but at a high level, I'll go over it very quickly. He made his money in Ethereum. He went to jail for 5 years. He was in on the Ethereum ICO, rolled all of his Bitcoin in on it, got out of jail, and had a cold wallet with more than $1 billion on it in the top of a closet. He then proceeded to roll it again and double down on taking risk. He took that and he staked it in Aave, borrowed USDT against it, staked the USDT in Aave, doubled down again, took all of that and invested it in Luna and UST, earning 20% to be able to service the debt there. Close to $3 billion that he was levered up on. I don't know what happened to that individual. I'm assuming that probably didn't work out well for him. I don't know him well enough to determine that one way or the other. But my point with that is, once you should only have to get rich once. This is a fantastic vehicle, in my personal opinion, and how I'm invested. that I think is going to generate that for many, many people. And so with that, once you get there, you probably don't need to take another huge swing or huge risk. And that's why diversification becomes important at this point. Now, again, I have my opinion that XRP will become a tier one asset designated by the BIS and will be riskless, right? It'd be like owning, a treasury that continues to appreciate over time and grow in value, which has never existed in the past. It's a completely new financial vehicle. But with that, diversifying some of your portfolio, mitigating risk, structuring things in the right way. You might work with a financial advisor to structure options around this. So what that means is many people that hold large stock positions, they will sell calls and puts on like a collared position on the asset. And what that does is you buy or sell those options and you're able to generate cash flow off of those. Now, if it falls and you have a put in place, you have to buy that at that price, which a lot of people that are holding XRP, if you're wanting additional cash to be able to deploy into the market to buy it cheaper, might be a great way to go about it because you're going to be generating cash flow and you're going to be buying at that price when it drops. The other side is you can sell calls and generate premium. And when the price rises, they will take your XRP, right? So there's a couple different ways that you can go about it. Again, you would want to work with a financial advisor. These are sophisticated things. Options are only available to people that are QPs or qualified purchasers that have more than a $5 million net worth. The other thing that I didn't mention, a little bit earlier on the smaller amounts is just educating yourself. And that's what you guys are doing here. You're coming to this webinar. You're curious. You want to understand more about these things, how to make sure that you're preserving your wealth. And, I applaud you. I appreciate that you're taking time out. And this is exactly what I think most people in that position need to be doing, because I do think this is coming quicker than a lot of people anticipate. So do you want to look at a family office at this point? Multifamily office really kind of starts around $20 to $50 million. Maybe you want to set up some bill pay, some concierge service. Maybe you want to, have somebody plan your travel, the high life, right? Again, this is all predicated on what you want your lifestyle to be. Those are not necessities. They are wants a lot of the time. They are nice to have because you don't have to think about things. You can just enjoy life with your family. And if somebody else is being paid to do that, a small amount in comparison to the quality of life that they're providing you, then maybe it's a good trade. A lot of people have traded time for money. And at this time, I think that'll switch for a lot of people where they're trading money for time because you'll have it to do it. So is it a good time to set up a family office? You're kind of already doing that if you do the estate planning with us. Is setting up a family compass or family charter is really kind of the crux of what a family office is. Builds in governance and continuity, defines, how the investments are going to be used over the duration of time that your family's around or what legacy you want to leave. So you'll have the beginnings of that, but a single family office generally requires at least 100 million or more in net worth. And that's really kind of the next level here. So aside from setting up a family office or not, you probably still want to get all the professionals that you might use inside your family office when you're worth 10, 20, $50 million. CPAs, tax attorneys, estate planners, wealth management, insurance. Insurance is a fantastic vehicle to be able to mitigate taxes and pass wealth on. We've seen the Rockefellers and many others use that. They actually built the financial products that exist in the insurance market today for those purposes. So again, and at that point, you might want to borrow against your assets too. Right, that's another great tax advantage way to be able to get access to liquidity, to live your lifestyle, do other things, infinite banking. If you don't know what that is, I would do some research and start to understand what that looks like inside insurance policies. We wrote a whole book on it, crypto, infinite banking. You just, put it in Google, type my name in there and it'll come up. And if you want to read that book, it's a long read, but it will give you really good context around the concept itself, and then also how to apply that to your digital assets as they appreciate in value. And then lastly, well, not lastly, but the last price point, right, is that $10,000 XRP. And I do think that we will see that in the not too distant future, next couple of years, predicated on the fact that XRP ends up being the back end for settlement of the derivatives market. Derivatives market today, they don't have an actual quantitative value for it. Those analysts that have reviewed it provide that it's somewhere between